What is up, everybody? This is Stock Market Education, and today we're going to be doing an update on my Robinhood portfolio, which is up about 4.5% since making my previous video. So, the first ETF that we have, which hasn't changed, is Vanguard High Dividend Yield ETF, okay? And on this position, we're still at about break even. We're only up 1.7%. Our equity is 1,700 in this one. When you go onto TD Ameritrade, you can look at their ratings between 3 and 5 years, and it both has a 4 out of 5 star rating between 3 and 5 years. And then the risk is also below average for both 3 to 5 years, and the return is above average for 3 to 5 years. And then if you also look into the portfolio section, you can see that this is a very defensive stock or index fund, with 37.64% in consumer defensive, healthcare, utilities. All of these are defensive sectors, and compared to 28% of cyclical. So they are very heavy in defensive, and the price to earnings also tells that with a PE of 15, which is pretty undervalued, and with a dividend yield of 3.65%. And when you look at the top 10 holdings, you can also see, again, that it's a very safe, very defensive index fund with Johnson & Johnson, JP Morgan, ExxonMobil. Like, the list just goes on and on as to what kind of stocks that they're picking. This Vanguard ETF makes up a large portion of my portfolio. And for that reason, I'm not planning on putting any more equity into this ETF. The next ETF that I have in my portfolio is ticker symbol DGRO. Now, DGRO is a dividend growth ETF, and I replaced DGRO with my other ETF that I held was SPHD. And the reason why I did that was because I know that dividend growth ETF is a better return on equity than SPHD, because SPHD only tracked low volatility stocks within the S&P 500 that were extremely safe, that weren't going to go anywhere. The third and final ETF on my stock portfolio is the SPY, the S&P 500. And the reason why I have the S&P 500 in my portfolio is because I want my portfolio to have an anchor, and I want to have an index that I can compare my earnings to. Currently, I have a little over $2,300 in equity, and I'm pretty much at break even right now. I only have a return of 2.24%. And currently, this is my largest holding in the SPY, and I don't plan on adding any more to the position. The first stock I have in my portfolio is McDonald's. And McDonald's, I currently have $1,400 in equity, and currently I'm up almost 20% on this return, and this is my biggest return so far in my portfolio of $232.35. And my average price for these shares were $171, and currently McDonald's is at $204.60. And currently McDonald's makes up about 12.5% of my portfolio. If there is a dip in McDonald's stock, then I will definitely capitalize on that window and add to my position. The next stock in my portfolio is Amazon stock. And Amazon right now is trading at about $19.0475. And currently we are up about 10% on the position, and my equity was an average cost of $17.30.92. Currently, Amazon makes up about 16.55% of my portfolio, and I would buy more Amazon stock if the stock was at a lower price, because if I had to buy another share of Amazon, that would make my position way bigger than what I'm comfortable with. Next up is Microsoft. Microsoft has had a nice little run going up in the past few weeks, and currently is at $136.70. Currently, I have a little over $1,000 in equity, and we're up about 15% for $143.21 for total return. And we bought these at about $118.80, and it makes up a little less than 10% of my portfolio. Again, I absolutely love Microsoft, and I'm hoping that the stock goes down even lower so that way I can build up a position. The next company that I have in my portfolio is in healthcare. It's United Healthcare. And this one I'm super excited about. I want to keep increasing my position in this one. Currently, I have $1,261.40 in it. I paid 240 average cost. I'm hoping it goes down a little lower so that way I can get that average cost down a little bit. And currently, United Health is trading at $252.28. Right now on the position, I am up only about 5% on it, so I don't want to put any more money in it just yet. Hopefully it goes below 240 once again, so that way I could increase that position. And right now this makes up about 11% of my portfolio. And the last stock that I have in my portfolio is Tesla stock. I recently just started buying Tesla stock, and currently I don't have much equity in it. In fact, I only have about 3.85% within Tesla stock. And currently I'm up about 8% on it so far with an average cost of 205. And I don't have that much Tesla stock right now because it's still very speculative in the sense that Tesla is not generating income at all right now at this point. Once they start generating income and I see some of those trends starting to take place, such as autonomous vehicles increasing or, bringing down the price of the Model Y and creating a car for the masses instead of just a niche as it is right now, then I'll put more money into the position. But currently, I plan on keeping this position very low unless it dips back down to the high 180s as it did previously before. And that is my Robinhood portfolio update. Thank you guys for watching the video. If you liked the video, give it a thumbs up. Let me know in the comment section below whether you liked it, hated it, or indifferent about it. And as always, this is Stock Market Education.